Well, good morning, everyone. It's good to be here on a beautiful November day. Thank God for November, because October was horrible. Happy to be back here in Frogtown, not too far away from the first house I ever owned, and just to be in a neighborhood that really has been just a strong working class neighborhood for generations in the city of St. Paul, but obviously one that has been affected by the mortgage foreclosure crisis. We've seen the effect of the mortgage foreclosure crisis across the city, across the state, and across this country. In St. Paul, we have utilized every tool in our toolbox to combat the effects of the mortgage foreclosure crisis. We recognized the severity of the crisis early on and launched our Invest St. Paul initiative to take a comprehensive look at the challenges faced by neighborhoods hardest hit by the foreclosure crisis. In the city of St. Paul, we're unique because we have a HUD-certified foreclosure counseling agency right in our Planning and Economic Development Department. In the past 3.5 years, our 6 multilingual counselors have been met with over 3,200 families and prevented more than 1,650 foreclosures. We're fortunate, thanks to partners and funders with various housing organizations, to be able to provide services to our residents. We've also been very proactive with our partners across the state, for chairing the Minnesota Foreclosure Prevention or Partners Council, to piloting the First Look program, to working closely with the Minnesota Home Ownership Center to achieve our goal of preventing foreclosures and keeping families in their homes. The house behind us is a house that we were able to obtain through the First Look program. We know that preventing foreclosures is the single most cost-effective measure we can take to stabilize neighborhoods and address the housing crisis. That's why I'm happy to be here with Council President Johnson from our city across the river, dare not speak its name, and Jon Campbell with Wells Fargo, and I want to thank them for their incredible commitment to cities with this new project that we're launching today. The main components of the plan, and Jon will tell you a little bit more about it, is first, targeted outreach to customers at risk of foreclosure. Second, an action plan to keep vacant properties from sitting idle. Third, hosting homebuyer workshops to encourage employees who work in the city to live in the city of St. Paul. We address 3 of the critical needs that we have in the city: prevent foreclosures, reduce vacant buildings, and reoccupy vacant homes. Most importantly, we know that all benefit when we achieve these goals. The city, the families in our community, businesses in our community all benefit. We can't do this alone, but we know that with partners, we can make a lot of difference for families in the city of St. Paul. We're glad that Wells Fargo has stepped up to the plate, has helped us with this, with some additional tools to deal with this very, very great challenge in our city, and I want to thank them for being here today. And I think I'm going to turn over Barb.
Okay.
All right. Minneapolis second.
Well, that's an unusual position for us to be in, but whatever. Well, I'm delighted to be here today in our sister city, and I want to be clear that we have, as a community, been in the forefront of dealing with this foreclosure crisis. We are very, very proud of how we have worked together through established partnerships that we've had all along, using tools with our cities, as the mayor mentioned. You know, the things that we've had to deal with these foreclosures have really taxed our departments, but we have great people working for our cities, and we've dealt with this crisis, I think, in a very responsible manner, and we'll deal with the ongoing problems that we have in that same strategic way. We continue to provide also in Minneapolis the foreclosure prevention assistance and have helped numerous homeowners to remain in their home. We also have been aggressive about acquiring properties in foreclosure and then getting them fixed up and put back on the market for home ownership. Wells Fargo has really been a strong partner in these efforts and done a remarkable job of helping us acquire these properties. And I just ran for re-election, and I was telling Peggy Gunn, I've been on 2 blocks where we have had open houses, and people tell me, I have 6 new homeowners on my block, and they are so delighted. In one case, I was on a block where we have tied some of our employers to some of the products that we have available to help people purchase homes. And on that block, 2 new homeowners from a particular business that they encouraged their employees who had been renters to become homeowners. And so I think what we've done is try to make the best of a crisis that is sort of beyond all of us in a very effective way. way, and we've done it because we've had these established partnerships to build on. So delighted to be here today. Great house, remarkable block, and this rehab will be a great place for someone to become a new homeowner.
Good afternoon, everybody, or I guess it's still morning. I'm Jon Campbell. I'm the president of Wells Fargo here in Minnesota. I want to thank both the mayor and the city council president. I feel relieved. The fact that you could pick on each other as opposed to picking on us is just wonderful. So I was waiting for that. In any case, I'm happy to be here this morning. And over the years, we've stood with the cities of St. Paul and Minneapolis in our efforts to find solutions to many challenges: jobs, transportation, education, and certainly most recently, housing and foreclosures. And we are pleased to be here again today to team with the cities of St. Paul and Minneapolis to build on our long-standing and strong relationships. The project we're announcing together is another great example, we believe, of leveraging public and private resources to address local housing challenges. The collaboration is a focused effort with many components, and the goal is certainly to preserve home ownership and stabilize neighborhoods. As Mayor Coleman mentioned, the main components include three pieces: foreclosure prevention outreach programs, co-branded and co-hosted by the cities and Wells Fargo. These will include personalized loan modification sessions for individual homeowners. Second, we want to accelerate the sale of foreclosed properties for rehabilitation and to help create sustainable home ownership. And third, we want to help promote home ownership opportunities in both St. Paul and Minneapolis, including a $125,000 grant for down payment assistance for first-time home buyers. Many of these types of efforts are already underway, and we've planned this collaboration as a focused and direct way to help homeowners and neighborhoods. It will also include benchmarks so we can monitor the progress we're making in each city. By co-branding outreach letters and workshops, we hope more homeowners will take advantage of the services and programs being offered to assist them. This collaboration will build on Wells Fargo's ongoing efforts to promote responsible lending, keep people in their homes, and stabilize communities hard hit by foreclosures. This home that we're at, as you've already heard, is a vacant house that was part of the First Look program. Wells Fargo worked with the City of St. Paul and the Housing and Redevelopment Authority to provide it at a reasonable price for rehabilitation and subsequent resale to a homeowner. We have experience working with city leaders who are joining us here this morning, and we know that collectively we can make a difference. We will continue working with them to find ways to help our homeowners and promote the long-term health of our neighborhoods and cities. This is what Wells Fargo is all about: serving the communities in which we live and work. We extend our thanks to Mayor Coleman and City Council President Barbara Johnson and other city leaders participating in today's announcement. We are proud to join in this effort. And I think we have a couple of checks here that I'm supposed to turn over. Good luck taking them to one of our tellers later today, but we have one for each. But it would be really bad to mix them up, wouldn't it?
Thank you so
Can you just make them out to cash?
No, not to make them out to cash. So thank you all for being here. I think we probably have a few minutes to take a couple of questions. Is that all right with both of you?
Sure.
All right, so we'll turn it over to all of you.
Questions?
Explain exactly what these checks represent here.
$62,500. Go ahead. This part of the.
I'll be happy to do that. In the process, in those unfortunate situations where a home does become vacant, it's critical that we find a way to get those homes back into home ownership quickly. And in the market we're in today, with relatively low, historically low interest rates, coupled with affordability that's been caused by the crisis, coupled with the first-time homebuyer tax credit, it's actually a remarkable opportunity for first-time homebuyers. One of the challenges first-time homebuyers have is many times they have not accumulated enough money to be able to make their down payment. And so these checks represent money that the cities can use to help create down payment assistance to first-time homebuyers, so we can take a home like this, which is a perfect example, that is now in the ownership of a good owner, being rehabbed, and will soon be available, and we hope that money like this would help a first-time homebuyer be able to buy this home.
I'll just add, this is an incredible opportunity, an incredible time to buy a house. There are lots of programs, including the federal money that has come for people that are interested, that have ever thought about buying a house. Obviously, there are a lot of folks that don't have jobs right now, or they're uncertain whether they're going to have a job in a couple of months, and they're waiting and they're hesitating. But we are really encouraging, as John talked about, the historically low interest rates. These types of assistance programs, this $125,000 for Minneapolis and St. Paul residents to be able to buy a home, incredibly helpful. We really want to encourage folks. Look at some of the foreclosed properties. These are really wonderful properties, but we've got to get them back before they start to deteriorate. We've got to have people living in them, because otherwise it will affect the quality of life in neighborhoods. So take advantage of this moment. We understand that times are tough and not everybody has a job or is uncertain about it, but we really do want to encourage people to take advantage of the money that's out there, including this money that we have here today.
Mayor Coleman, what size increments do you foresee distributing those funds in?
I don't know that we have determined that yet, have we? I don't know that we have. I think it's part of just an overall assistance. Obviously, with $125,000, that's a good pool. It will be able to help families, but it's not going to be, in and of itself is insufficient. But that's where the partnership piece becomes so critical. It's all the folks coming together. It's what Wells Fargo can do. It's what we are doing. It's what the federal money is allowing us to do. So all of these pieces together really provide, I think, the resources that families need to be able to get into a home.
Can I just add about Minneapolis? In Minneapolis, we've actually used some of our development dollars to assist people through the Minneapolis Advantage program, where we've used a $10,000 forgivable grant for people who become first-time homebuyers. Some of our neighborhood associations are using some of their funds to assist people, so people can get a really good package put together. And what I'm finding is really, through all these years of housing prices inflating, young people had the hardest time getting into the housing market. And today, young people are the people that are buying these homes because they can do it in a manner that they can afford, and it's really a remarkable thing.
Question for you. Where are we in the in the crisis? I know that we kind of had that first wave, and then there was kind of a second wave. Are we still in that, or do we see more coming?
I represent part of North Minneapolis, and we were really hit with the first wave with a lot of the real illegal practices that went on, and that has passed us by. But just reading the paper yesterday, it looks like more prime mortgages are in trouble, and it's because of the typical problems that people have with unemployment and jobs, medical costs, that sort of thing that have always been the drivers of foreclosure. So the economy is not helping us in this mix. But I have faith the economy is going to get better too, and I think we'll see some improvement. But I think we're at a stage where it's the typical types of problems that people have that have always driven foreclosures.
So it's better than it was.
Absolutely.
But still not good.
Right.
Can you describe the breakdown of this program? Is it like 60% about rehabbing and reselling, and then 40% modification, or how do you break down the focus?
I'll give that to the mayor.
Well, but I'm sure Barb would agree that the first and most important thing is the mortgage foreclosure prevention. That is absolutely the critical piece of it. So it's the foreclosure counseling programs, it's the assistance, it's the restructuring the loans under is it the RAMP program? HAMP, something like that.
It's HARP too.
HARP, enough acronyms. The bottom line is that homeowners can have their mortgage rates readjusted where appropriate, and they should be looking at this. I know that this is part of the discussion to figure out how Wells can go in there and assist families that are trying to restructure their loans. Whatever it takes from the city standpoint, the 6 additional multilingual counselors that we've had that have worked with the 1,650 families, all of these things are the absolutely the most critical piece. Then the second most important piece is to get those homes homes, if they do fall into foreclosure, to get them reoccupied as quickly as possible, because that is where you see the deteriorating and debilitating effects on a neighborhood. So if a house like this, which is got good bones, it's got it's good structure, if that sits there for a long time, all of a sudden the windows get broken out, the copper piping gets stolen, all of those things start to happen. It can tend to be a congregating point for criminal activity, and all of a sudden all these homeowners that have put so much time and effort into their yards and into their homes, all of a sudden their value of their properties start to decrease. So those are the two most critical pieces in this whole thing.
How much money is going towards the prevention piece?
We have, I don't know that we have a running total on that, but there's so much, because you would really talk about the 6 counselors, you would talk about the money that, on the federal level that's going, the stuff that we're talking about here, so.
In Minneapolis, we do about $500,000 a year of our general fund dollars into foreclosure prevention. The other thing that I want to mention, in neighborhoods like this, in the neighborhoods that I represent, housing needs a constant investment. And one of the things that will happen to this house and to the houses that the cities have been able to touch in these partnerships is that they will be rehabbed. And they will be then up to snuff, up to code, new concrete, new roof, all that sort of thing, new plumbing. And so then that becomes a home that somebody doesn't have to put a whole bunch of money into every year. And so they're able to afford it for a very, very long time. So it's a much more stable kind of ownership than some of the properties that turned over early in this foreclosure stuff.
Let me just comment briefly on the foreclosure prevention. What the cities have offered to help us with is really significant. One of the challenges in this environment is that if you're a struggling homeowner, you have many emotions. Those emotions can range everything from fear to anger toward people like us who are the lenders, to embarrassment in their families or neighborhoods or friends. And so these families are dealing with lots of emotions. And unfortunately, bankers aren't always loved. And so you couple a fear of, your servicer, your lender, coupled with your own emotions, it gets pretty hard. And unfortunately, too many foreclosures result because the lender or the servicer and the struggling family simply can't get together. And many times it's because of these emotions I've talked about. Our hope is that by having events that are co-branded by the cities along with Wells Fargo, maybe we can overcome some of these emotions that keep us from talking to each other. We send letters, we make phone calls, we even go out and go neighborhood to talk to people to try and get them into discussions around modifications, but because of some of these emotions I described, we don't get that opportunity. So this is an effort to try and use parties who may be seen in a more neutral way than ourselves to get their help in helping bring us together with families that we might be able to find a solution for if we could actually sit down and have that dialogue. And in terms of financial costs, I can tell you that the cost to a company like ours of doing foreclosure prevention is a staggering number, and that's what I'll say. It's a staggering number.
Thanks, everyone.
Thanks.